Morning, I'm Carol Harmer from the International Trading Institute, and this morning what I'm going to do is a quick run through of the Euro dollar and the dollar index. So if you bear with me, I'll take you to the chart right now. Now what I'm going to do, I'm looking at a daily chart, but obviously when we do our full analysis we look at the weekly and the monthly as well. But just for today we're going to look at a very short term trading strategy, or not even a trading strategy, just what I would do. Now people say Fibonacci levels don't work. I don't think it's that they don't work, I think it's that people don't know where to put them, and that causes a whole world of grief when you're trading Fibonacci, or not even trading but just looking for support and resistance levels. You need to know where to put the correct levels, and we hope that when you're on our course at ITI that we will teach you exactly where to put these starting points and end points so that you maximise your profits, and you can be able to, when the course ends, you'll be able to do this all by yourself. That's our aim anyway, is to get your trading and being able to put on the indicators as they should be used and not just willy-nilly as they shouldn't be used. So we've put the indicators on, put the Fibonacci levels on. You can see at the moment the euro is trading just above the 38.2 at 11.20. That's where it is. So we're at 11.09 now. So if you look at 11.12, you can see that we're just about on it, dipped down a little bit below it, but we're back above it at the moment. So the next level I'm going to be looking at is the 50-day moving average. That's coming in at 110.73. You're going to get a lot of support around that area, and the reason you're going to get support around that area is that you're going to see profit taking and fresh buyers coming in. So there's a double bubble when we see levels like this come into play. So remember, even if you're profit taking, okay, you can always go back into the market. You always get a second bite of the cherry with most of the markets. So you don't need to rush and feel like you've missed out. You haven't. You're just waiting for the market to go down, do its thing, hit its level, let the profit takers, let the new buyers come in, look at it again, see what happens, look at your indicators, look at your stochastics, looking at your RSI, looking at whether there's enough momentum behind this move. There's all sorts of things you're looking at to be able to make the correct informed decisions about where and how you trade this market. So that's the state of play. You can see that once we started to break down below here, and we had that little tiny pattern there, off we went on the downward spiral. Now obviously if you're trading the euro dollar, you can't trade the euro dollar without looking at the dollar index. And the reason I say this is because the dollar index really is a very important part of it, because it's so heavily weighted in the euro dollar favour. So you know, I find that when I used to trade the euro dollar, I would always look at what the DXY is doing anyway. Okay, remember that's the futures contract, so you're looking out to the future of it. But they have got a dollar index spot that you can look at, and you know, anything that you can do to enhance your trading, then obviously that's what we're trying to do, trying to achieve. It's a bit like, what comes first, the donkey, the horse, or the cart? You know, that's what you're looking at when you're trading. There's so much to look at that you don't need to look at. You really need to strip down as much as you can off of a chart and look at the things that you know that the market is looking at. If you start to get too heavily involved in indicators and the technical side of the market and miss out more of the charting side, I think you're going to come more under pressure. I think the best traders combine both. You need to know what the charts are telling you. Then you add the indicators in, because the charts are the most important, because you're going to get the patterns that you need to know out of a chart. You're not going to get them out of just using technical technical indicators. You're not. So bear that in mind. And now we're going to go back and we're going to have a look, you know, where did the dollar index go on the dollar decline? On the euro decline. You can look here. You see you've got an inverse head and shoulder pattern. Okay? It's only a little one, but it still has a targeted area. And if you measure the targeted area, it's from where the little head is, to the neckline. So we go there at 105, and we look then to where would be the measure target. So you just sort of look at it, eyeball it at 1, 2, 3. Right, so there's your target there. Okay, so when you're looking at the dollar index, you can see where the 61.8 is coming in at 102.14. You can see that the 50-day moving average is coming in at 102.08. That is going to be an area where you're going to see, this is what I've told you before, profit taking, market can sell off a bit, normally back to the neckline, which, let's say for example, it's around here. So we're looking at 10.05, that sort of area. You can always go back in and buy on the pullback. You don't want to make a buy above this on the first attempt. Personally, I think it should be on the third attempt, because what you do on the first attempt, stops going off, then you've got the algorithms to deal with. There's all sorts of things that's going on that can put you off of what you should be doing. So for me, I always used to buy on the third break, second or third, depend. For you guys, it would be a third, right? Because that is your definition of it's definitely going to break. Okay, so go back, have a look at what I've said, and I wish you luck. And this afternoon I'm going to do stock markets for you. Now, obviously, International Trading Institute is a new company, new idea. We have a YouTube channel, and it will be great if you go on, like, subscribe. It just gives us an idea, really, about who is watching this, how many people are watching it, and we're interested because we want you to learn. So if you go in and you do this for us, like, subscribe, we can put our marketing team in place and target specific areas of where we think we are needed the most. Okay, well, it's Monday morning. Have a good week. I'll catch you later.